Well, to help break down some of China's stock market moves, international business executive Ryan Patel joins me now from Los Angeles. Welcome, Ryan.
Thanks for having me.
So let's start with what the major reasons are that really led up to this plunge we're seeing.
Well, it wasn't just about this week. Obviously, it kind of started last week too when, the Chinese market hit about a 4% decrease when the tariff announcement came back, when Trump administration decided to retaliate further. And I think that started to get really real for the investors to say, okay, this is actually not going to, go away. And, obviously people were looking at the GDP in China and obviously the slower start from the beginning of the year. So it was kind of just not one thing, but it was multiple things on top of this trade piece.
So which investors should be most nervous in terms of the sectors and the industries which are suffering the most losses?
Well, obviously, I think you look at automotive, but you look at tech. I think for me right now, if you're in the tech space, it is really hard to navigate what really is going to happen in the future and what is the clear path, because you do not know what restrictions. As of today, the company, of the way it imports and exports and it does its business in multiple countries, could be fine, but tomorrow it could change. That causes a lot of uncertainty, and when it is targeted toward the tech pieces, AI pieces, and even agriculture and manufacturing, that gets all in there.
And so as we look at all this uncertainty, how are Chinese investors reacting to this?
Well, I mean, I guess the other day, not very well, but I think they're looking at this in multiple ways. I think you look at one, obviously you got the tariff piece. Two, you look at maybe the slower growth of, what the year numbers look like from year over year, from where the GDP growth was last year to this year. But more importantly, looking forward, I think everyone's looking at what is the investments for specifically Chinese investors are looking, what is the restriction? And I think we're getting a lot of different rhetoric on what exactly that number, percentage from the last 24 hours on what that will look like. And that's causing a lot of nervousness, because I think people thought, well, it's going to be a certain percentage or maybe it's a certain industry, but it's not clear right now, as the administration came out and said they're going to do something, but they haven't said what.
Now, some people like uncertainty. They see it more as opportunity. So are there any opportunities to be had either for Chinese investors or perhaps foreign investors at this point?
Yeah, I think when it's a flip of a coin. When it's bad for somebody else, it's good for some other country. Like if I'm looking into this as an investor, and I would say, well, if the U.S. is a little bit more difficult to invest in, or vice versa, there's other places that could make it more friendly, and other countries can, specifically in the Southeast Asia region and even in the European region, there are countries that are looking for capital. And I think when you have capital and there are countries that are willing to make it easier for you to do business and make investments, that is who's going to win. It's those countries that are forward thinking and are going to make it, trying to capitalize this opportunity.
Now, it's interesting because we know President Trump has China in its sights. We know that they're curbing investments, not just on China, as they're saying, but on multiple countries. But this is all
Yeah.
also happening while China is opening up its market further and reducing some of the restrictions for foreign investors. So could President Trump's strategy essentially backfire and push investment towards China?
Yeah, they could, right? You kind of saw the news in Harley Davidson that chose to do more stuff with the EU and the US being in the middle of their tariff kind of trade, and the Harley Davidson deciding to put a new factory in the EU. That could easily happen with some other companies. But I can tell you this: if the more corporate companies in the US are starting to go to China, I think I can see the US Trump administration trying to derail that. But I think it only makes sense. You don't give the corporations very much choice, except for, well, it just makes sense to, if China's opening this door and it's easier to do business and you have a population and a consumer group that was looking to purchase that, it just is the natural selection to go that route.
So as we look at how the market is performing, talk about how the recent PBOC moves have affected the market's performance.
Yeah, that's interesting. I think this is kind of where that, when you cut in reserves and you're getting a little bit tighter about lending money, it kind of does stunt the growth just a tad of what is out there of investments and how easily accessible capital is. And on top of that, the dollar actually has gotten stronger toward the Chinese currency. So I think the move on the timing of this is probably not the best, but I think I see what China's trying to do and try to shore up that perspective. But the timing of all this hitting at the same time does play a factor.
So as we look ahead, how likely are we to see any policy changes or moves to continue to stem these losses?
Well, there has to be, right? I think we can't, I don't think either country can go into this and start putting restrictions on both sides, especially when they need capital. And on top of that, not having, maybe at least for the U.S., not having maybe a backup plan of who else you would get capital from. At least China is in a position in Southeast Asia to be able to possibly, create kind of more of a funnel to provide, kind of stay ahead of this kind of deficit that could possibly happen. But I believe both of them will have to put some kind of policy to get in place so they can kind of recoup as much as they can.
All right, thank you as always for your insights. Ryan Patel, International Business Executive.